Good afternoon from TaxTv channel in Tel Aviv. Good afternoon to Jackie Hendley from Birmingham, UK. How are you?
I'm very good, thank you. And yourself?
I'm fine. Both of us are members of Elliott Group International, investing in UK real estate. I heard that recently many foreign investors are coming to UK seeking to invest in residential property, mainly out from London.
Yeah, there's a lot of opportunities all over the UK. We're seeing an increasing trend of overseas investors, including Chinese and other jurisdictions, investing around the country.
Jackie, what are the additional costs and taxation on such a purchase?
Yeah, you normally have to appoint a solicitor to look after the conveyancing, and that will incur a legal cost. And then there's a tax cost depending on the value of the property, and that can range from anything from 0% to 12% of the cost of the property, and that tax is called stamp duty.
What taxes a private non-resident person will pay on rent earnings from such a property?
It depends on how they set it up. If they're buying it as an individual, they will pay tax at rates of up to 45%. It depends on how much income they get, and there will be a requirement for them to deduct tax at source. So the investor would get the income net of tax. It is possible for them to apply to the revenue to receive that income gross, but in order to do so, they have to complete regular returns to the revenue, and they have to keep their payments and their returns up on time.
The foreign investor decides to set up a corporation in order to make such an investment. In this case, what will be the tax rates?
Yeah, if they set up by a corporation, it depends on the value of the property that is invested, and there is a tax which is called the annual tax envelope dwellings, which is a tax which is charged on that company. The amounts that are payable per year can vary from 7,000 up to 218,200 just for the convenience of having it in a corporation. They would then pay tax on the income that the company receives at the normal income tax rates, which are around 20–21%.
Will there be any withholding tax when a UK company distributes dividends to its foreign shareholder?
There is no withholding tax on dividends from the UK to a foreign investor.
0%, very interesting. When selling the property, what will be the taxation on the capital gain?
Okay, historically, there was no capital gains tax on sale of properties by investors. There's a new rule that's just come in from the 6th of April this year, 2015, that any gain that accrues post that date will be subject to capital gains tax, and the rate of capital gains tax is either 18% or 28%.
Jackie, are there any interesting tax structures you would recommend?
As far as some of it depends on what the investor wants to achieve. By having a holding company that owns the property, they can obviously get the income or dividends from that at a 0%. But if the property is a very valuable property, then they would have to pay the annual dwellings cost, which actually would make it more expensive. So it does depend on the value of the property.
Thank you, Jackie.
Thank you. Nice to speak to you.
And to all of our viewers, do not forget, you should always consult first with an expert.